The Q&A session at the Berkshire Hathaway shareholders meeting was nothing short of interesting. The second part of it covered some more interesting lessons from Warren and Charlie. They covered everything from the debt ceiling to their thoughts on Elon Musk and everything in between. In this video, I'll be unpacking their thoughts, so take a seat and let's get into what they had to say. Welcome to The Eighth Wonder, a channel dedicated to making compound interest your best interest.
You should never have a night when you're worried about investing. I mean, assuming you have any money to invest at all, and you should spend a little bit less than you earn, and you can spend a little bit more than you earn, and then you've got debt, and the chances are you'll never get out of debt. I'll make an exception in terms of a mortgage on your house, but credit card debt, we're in the credit card business big time, and the world will stay in the credit card business. But why get behind the game? And if you're effectively paying 12 or 14 or whatever percent you're paying on a credit card, you're saying I'm going to earn more than 12 or 14% of money. And if you can do that, come to Berkshire Hathaway.
The transparency of Warren Buffett is unmatched. As one who owns and benefits a lot from a credit card company, he still warns against credit card debt, especially in times like these where interest rates are so high. He advises that people apply a principle that is very simple but powerful: spend less than what you earn. This can rid you of a lot of financial heartaches. With inflation being as high as it has been, it is no time to be spending money you don't have on things you don't need at a higher price, requiring a higher repayment. You can increase the power of this principle by setting some money aside to invest so you can grow the money left over from spending less and thus make good returns on your money. Charlie had this to add.
Well, it's so simple to spend less than you earn and invest shrewdly and avoid toxic people and toxic activities and try and keep learning all your life, et cetera, and do a lot of deferred gratification because you prefer life that way. And if you do all those things, you are almost certain to succeed. And if you don't, you're going to need a lot of luck. And you don't want to need a lot of luck. You want to go into a game where you're very likely to win without having any unusual luck.
In order to win without needing an unusual amount of luck, as Charlie says, you need to stick to principles that have proven to work time after time. You don't need to go looking for some crazy method out there. This one is tried and tested. If 2 billionaires recommend it, then it must be right.
And you're probably going to get better gross margins if they ask for you by name. I mean, they just had an article about Bernard Arnault, who built LVMH, and he's got a blue box at Tiffany, and the blue box itself means something. And Coca-Cola, the bottle, meant something. In the 1920s, I think there was a study of that kind of hoop skirt bottle, and blindfolded, a very high percentage of the population could recognize it was Coca-Cola. When they can recognize not only the product but the container, you're going to have good gross margins. And if you're just another cola, and there have been hundreds of them, and even if you have distribution through something like Walmart, who has Sam's Cola, it just doesn't, it's not the same. I mean, here I am,
Warren also took time to explain how a business with a well-known brand can afford you a great amount of gross margin. It simply means the return on what you put in initially once all the operational costs have been deducted. This is a principle that he clearly has been applying, and he even gives an example with Coca-Cola, which has been a wonderful investment for Berkshire. This is something we can all learn and apply in our own investment portfolios. When asked about the large amounts of cash and cash equivalents Berkshire has been holding on to and what the plans for those funds are, this is what Warren had to say.
What we really like to do is buy great businesses. If we could buy a company for $50 billion or $75 billion, $100 billion, we could do it. And we can do it, and our word's good. It's difficult with a public company. It'd be easier to do with a private company, and there aren't very many that are big. On the other hand, there's nobody else that can quite make a deal like we can under the right circumstances. Our own shareholders can be selling the stock too cheap, and we'll never do anything to make them sell it cheap, and we'll tell them the truth about what the business is. But if market circumstances result in us being able to buy in $50 billion of our own stock, we'll buy it. So we'll see what the world holds. But I don't we don't have the opportunities we used to have, but we've got enough, and we're making money with the things we have. It isn't killing us to hold 130 billion of bills at 5% plus bond equivalent yields.
This gives us a bit of an insight on the thought process that goes into spending money at Berkshire. When a company has that much money at their disposal, it becomes increasingly difficult to find good deals that can actually move the needle for you. It becomes even harder when looking at publicly traded companies because there's a lot of decision makers involved, which can make for lengthy discussions, delays, and ultimately deals falling through. Warren Buffett further explains that under the right circumstances, they are better off using the funds to buy back some of the company's stock and help it gain a bit of value. They currently have a lot of cash in treasuries which have some very attractive rates of return due to current interest rates. A big talking point has been Berkshire's holding of Activision Blizzard, which was supposed to be bought by Microsoft. This deal ended up falling apart and people were left curious, wanting to know if Berkshire would continue holding on to the stock. On this subject, Warren had this to say.
Well, I think in terms of what we do with stocks, we don't give information except when required to, which is in the 13F or whatever we file. And there's certain things you can actually figure out by looking at our 10Q, which we filed this morning, but you have to look pretty hard. But I would say this: I think Microsoft has been remarkably what's the word? Willing to cooperate with governing bodies, and I mean, they want to do the deal, and they've met the opposition, it seems to me, more than halfway. But that doesn't mean that it gets done if a given country, in this case the UK, wants to block it. They're in a better position to block it than the United States. That's just the way the world works. And that doesn't get solved by offering more money. So I don't know how it turns out. But if it doesn't go through, I don't think it's through any shortcoming by either Microsoft or Activision.
So Warren doesn't actually say what their position is, but he explains what happened in order for the deal to fall apart, which helps us further understand the point from earlier about buying publicly traded companies. If you really want to find out what moves they made in this case, you can either do as Warren says, which is to look for the information on the available filings, or wait for the 13F filing, which will give you more detail on all the activities from this quarter at Berkshire. I like how Warren does not want people to blindly follow his moves because he knows why he's making them, but you on the other hand don't. So instead of shadowing him, you should go and do your own research and invest in businesses that you understand. If you've been following Warren and Charlie, then you probably know that there have been some interesting exchanges, so to call them, between them and Elon Musk. And when a question was asked about Elon, this is what they had to say.
Well, yes, I think Elon Musk overestimates himself, but he is very talented. So he's overestimating somebody who doesn't need to overestimate to be very talented.
There's a Bill Maher program, about a week old, maybe 2 weeks old, but he interviews Elon, and Elon does a terrific job toe-to-toe with Bill Maher, who it's worth watching. And Elon he's a brilliant guy, and I would say that he might score over 170, but he he dreams about things, and his dreams have got a foundation.
He would not have achieved what he has in life if he hadn't tried for unreasonably extreme objectives. He likes taking on the impossible job and doing it. We're different. Warren and I are looking for the easy job that we can identify.
Yeah. If we can do it playing tic-tac-toe, we'll do it, you know. I mean,
We have a wholly different way of going
just
at
the
life.
whole way. Yeah. But we don't want to compete with Elon in a lot of things. I mean,
We don't want that much failure.
yeah.
So they both had a lot of good to say about Elon and the kind of things he's able to do. They praised him for his ability to do so much and do it so well. They admitted that his style of getting things done is not something that they could sustain, neither would they want to compete with him. On the sheer amount of things Elon is able to do, this is what Warren had to say.
Yeah, and it takes over your life, and I mean, in a way that it just doesn't fit us. But you know, there are going to be, well, there have been important things done by Elon already, and it requires, fanaticism isn't the word.
Yeah, it is the word.
No, okay. Well, it isn't quite the word, but yeah, but it's a dedication to solving the impossible, and every now and then they'll do it, but it would be torturous to me or Charlie, and I like the way I'm living, and I wouldn't enjoy being in his, but he wouldn't enjoy being in my shoes either.
So as you can see, there's a good amount of respect from Warren and Charlie towards Elon, and who knows, maybe this respect might lead to joint ventures in the future. A lot of questions were asked at the meeting, but these are a few of the things that I thought were interesting and should be talked about. What are your thoughts on Elon Musk and what Warren and Charlie had to say? Comment below and let me know. Also, let me know if there's anything else that you would like to hear me speak on in the future. I hope you found value in this video. If you did, then add some value to the video by clicking on the like button and sharing it with a friend. Subscribe to the channel if you haven't already done so, and while you're at it, make sure to click on the notification bell to stay informed on more personal finance and investment lessons. Thanks for watching. Hope to see you on the next one. But until then, stay invested.